Traders, welcome back to the channel. We got some big things going on this week. This will be an update before we go into the CPI data and what exactly to expect from this as well. I mentioned last week you were going to get a test of the $400 level on the S&P, and we got exactly that. I'm going to tell you exactly what I'm expecting for the stock market crash, the recession, everything along those lines, unbiased, and providing the data behind these theories as well. I ask you to consider doing two things: liking and subscribing. I'm giving you the best and most transparent content regarding the stock market almost every single day. But let's not waste any more time. Let's get to it. So what we're going to look at here first is we're going to look at the chart, and I have a lot of stuff to talk about here, but what we're going to really dive into is going to be what's happening specifically on Wednesday with CPI data. That's where all eyes are focused, and I want to highlight some of the concerns here. Now, you're having the UBS come out and say this is a little bit older of a comment regarding CPI going on from the middle of this past month, but it's still going to give you a good outlook and the overall expectations here. So basically the statement is that inflation has peaked. Now, personally, I don't believe it's peaked, and we won't know until the data comes out for the actual inflation rate, but the thesis still stands that CPI looks very gnarly. It looks very much like it wants to continue to the downside. And why exactly does it look like that? So what I want to do is zoom in just a little bit, and then I want to highlight some key points. So inflation and the housing market specifically is the concern for me. Those are the things that are very, very much concerning. And they highlight them here. Outsized increases in rents for new leases, which we'll get to here in a second, which peaked last summer, continue to gradually flow into CPI measures. So basically since last summer into now, which they are continuously rising, and we're going back into summer months, which indicates that's the highest time for rents to go up. If you don't know, going into the winter months, basically November through January is the best time to get a lease based on the rates for those specific months in the leasing terms. That's just overall the best time to ever get an apartment or anything like that. If you're interested, shout out. Yeah, that's the best time to go get a lease. So going into those months, we expect more heat going into this. Now, also, you have to look at spending overall. Now, also looking at the mortgage rate. I mean, I'm going to keep saying also because there's so many things stacking on top of each other. From Friday, you can see that rate, the average 30-year fixed mortgage is 5.64, which are highs since, if you don't know, 2009. These are highs since back to 2009. Yes, I'm not lying to you. All the way back here, 2009 is the last time you were back even close to these regions. And going back to that is even 2007, which we can go back and explain exactly what was happening there. The next thing is what's happening with these said mortgages. They're adjusting them from fixed to ARMs, which is about 13% of homes in America right now. This is compiling to be an absolute disaster. So I think CPI can come out very weak with the overall consumer price index, and that's just going to be rough overall. That's going to be on Wednesday. I won't have another update until Wednesday, just so you know. But looking at how this is moving on the S&P, I'm going to give you my overall analysis here. Now, what we were looking at on Friday was this level here, about 405, the double bottom we had. I mentioned if you did not get above 412 right here. So I said specifically, I'm showing you key ranges. So when you're watching here, it's all about reactions. And that's what the beautiful thing is about this channel, is when you're trading like this, it's going to give you opportunities no matter what. So what were we looking for here? We said if you got above this region right here, what we were looking to do was to trade it to the upside, right? So we said if you came out Monday morning, you broke up and you came down, we were going to trade it to the upside, the long side on that retest. However, we said if you started getting immediate downside, you were going to break through that $400 region. That was clear. That's what we expected. We did not think we were going to just trend in this range like so. We did not think you were just going to come into this block, chill, and just sit right here. No, we didn't think that was going to happen. We thought sellers or buyers were going to make a move either way in either direction. And we're going to get to the book map here in a second to show what the dark pool was doing here as well. But you can see that instant drop at the open and then push even further down, getting a little bit below the $400 region, and you're getting some bounce now, but I anticipate more drop to come. So looking here, what am I looking at? You're getting a little bit of love, almost back to the weekly. I think you're going to get some more downside, though. This is looking very, very weak. And once you get below and start establishing below this support right here, it's going to get ugly in the market, guys. It's already ugly. I get it. It's already nasty. But once you get below $400 on the S&P, it's going to get brutal. It's going to get rough. It's going to get ugly. There's already blood in the water. If we look at some of the bigger names, Tesla down big, Amazon down big. You're having Apple as well down big. They're all getting shot down right now. So going back to the S&P, in my opinion, again, if you get below this level here, it's all bets off, all money to the put side. But until that happens, you got to be watching the key range here as well. So basically there's 3 ranges we're watching in the shorter term into Wednesday. It's right here. So basically, if you get above this range here, what we're looking for is calls to that upside, and we're looking for potential trading back into that range of about 411, 412. If you stay below this range right now, you're looking for puts back down to 395, 400. You break below 400, you can ride those puts out, move those stop losses, and really ride those down into CPI data. Now, in my opinion, I think CPI data is going to come out bad. It could go either way. I've already described what could happen there as well. If it comes out at break even on CPI data, just overall expectations, I think you have a lot of room for the upside. But if you miss at all, catastrophic downside, in my opinion, just based on the stance the Fed has been announcing to the nation. And I think it's going to contradict everything they've said. Going to the Nasdaq, representing tech, how are you moving here? Looking at the Nasdaq, you continue to just really get beat up. You can see how much lower you are from those weeklies as well. This was your weekly open. Look how much room you've already made down. And I pointed this out last Friday. I explained to you guys, 12.25 was the area to come down to. This was the region. We expected a 12.25 touch. That's what we wanted. You're getting it right now. You're getting some support. You're getting some love, but you're pushing back up and you still are in that downtrend. You can easily see you're not getting the pressure from the buyers that you need. If you really look here, you're just still steady on the downside, still below VWAP. Volume still in favor too of the bears. And then finally coming out to the 10-year yield. Again, I posted this in the last video, but this is a 40-year trend, people. A 40-year trend on the 10-year yields, the bonds. Look at this trend line to the downside for the past 40 years. You broke out of it in 2018. You got a scare. You came back down. You broke out of it again here, and you haven't looked back. And then you broke the 26-year trend right here to the downside, which again, you're breaking right now, which was the top of that previous level. You are going ballistic. And if you want to see exactly where you're at, you just tested the range of the top from 2018. You're about to break that, and you will be pushing to the 2011, 2010 range next, which is going to be happening. Again, looking at the overall conversion that you're seeing, the inversion on the US30 and the 10-year. I'm going to keep pointing this out because this is the biggest indicator that there is. You can see it's going down a little bit. You're at 0.95, but you can see that 10-year is pumping dramatically, and it's kind of in expectation. You're getting a nice little flag here going into CPI data as well. CPI comes out bad, yields are going to fly. They're going to keep raising and going higher as well. Looking at Bookmap, looking at the actual order flow, this is a bit concerning here as well. One thing that you are seeing is a lot of volume onto the kind of buying side. You're seeing that CVD scaling it up, cumulative volume delta. You're seeing it scaling up, which is pretty interesting nevertheless with how you're moving today. However, with the bigger orders on the icebergs in the hidden order book, you're seeing a lot of mixed signals here. So right now, I traded Tesla this morning. We traded that in Discord to the downside. That's personally what we were looking at, and this is what we were trading here. We got Jay Ream calling out this morning. We got into those puts very early, the 750 puts at 7.8. I exited around 13. They ended up getting close to $15, $16 and counting now. So that's where you're moving right now. And overall, you're having pretty great opportunities. But after you had that $400 test on the S&P, I felt more comfortable just taking a step back and just waiting on the market through lunch right now. But as you look here, I think you're going to be topping out on CVD and maybe getting that downward pressure. But again, right now, the coin is in the air, and I think you're kind of waiting to see how it lands. Going to the S&P, this is my personal opinion, what I'm looking for, the big things to confirm trades, in my opinion. As we zoom in here, I'm waiting to see how we react from this top zone here. If you get a pushback down, a rejection, I'd be playing it back to the downside. If you get above it, I'm waiting for another test, and I'm playing it to the upside. That's how I would play it. Now, people are saying, well, Tyler, I thought you're projecting more downside. I personally am, but how I trade is solely based on reaction-based trading. So you are getting some love, you are getting some flag, so we got to see how you react first. If you break above, you wait for the retest, you trade it back up. That's how you look at it. It's very simple. If you reject, what are you looking for? It's very, very simple. If you come in and reject, you're waiting and then you're getting in for that downside push back to 400 and hopefully a deeper break below. But it's worth mentioning, you have touched major supports so far. The 400 test on S&P and the Nasdaq test on 1225. So those are key levels, and you got to see how you react going forward. Trade cautiously. More content will be coming. In the big news on Wednesday, we will be covering as well. Consider liking and subscribing for daily content.